Yes. So what do you mean by amalgamation? So first of all, you should know about amalgamation first. So what do you mean by amalgamation? So amalgamation means two or more company coming together to form a new company. Suppose if there is A company and one more company known as B company, they both combining together to form new company called as C Limited. That is known as amalgamation. That means there is a liquidation of company as well as one new formation of a company. See this, that is known as amalgamation. Then there is absorption. What do you mean by absorption? Taking over of the business of one or more company by a company already in existence. Hence, here there is no formation of a new company. So that means what? There is one liquidation, but there is no formation of new company. In that case, that is known as absorption. So in the case of absorption, what happens? Suppose there is A company. A company decide to take over B Limited. So this is a case of absorption. Then we are going to see about reconstruction. Separate, there is a chapter called as reconstruction. So reconstruction is nothing but reorganization of a company. So reconstruction may be of external reconstruction or internal reconstruction. So when external reconstruction take place, whenever there is any financial difficulties in the organization, in that case what happens, new company is formed to take over the business of the another company under a new name. That is known as external reconstruction. Similarly, there is internal reconstruction. That means there is no liquidation as well as there is no formation of a company. In that case, what happens? They will alter the share capital and they will uh, they will internally do the things without liquidating the company. So this is about internal reconstruction. So this is all theory part. Theory part is not needed, but before solving the problem, you should know what is what. So you should know this. So types of amalgamation. So types of amalgamation. First is amalgamation in the nature of merger. So whenever there is an amalgamation in the nature of merger, if it satisfy all the conditions, that means it should satisfy all the following conditions, then only it is treated as amalgamation in the nature of merger. What are those conditions? All the assets and liabilities of the transferor company after amalgamation becomes the assets and liability of transferee company. So what do you mean by transferor company here? Transferor company means it is a selling company. And what is transferee company? Transferee company is nothing but it is a purchasing company. So that thing need to be clear. Transferor as well as transferee company. Then shareholders not holding less than 90% of the face value of equity shares of the transferor company becomes the equity shareholder of the transferee company by the virtue of amalgamation. That is one more rule. So excluding the equity share already held therein immediately before amalgamation by the transferee company or by the subsidiaries. So these are the rules that you should know. Then one more thing is consideration must be in cash, or in case of fractional share it must be in cash, or else by the issue of equity shares or debenture you can pay the consideration. So here who is paying the consideration to whom? So purchasing company is paying the consideration to the selling company. So that is the one more thing you should remember. Then business of transferor companies intend to business of the transferor company intend to be carried on after amalgamation by the transferee company. So that is one more thing that also you need to take into account. And no adjustment shall be done in the books of both the companies, that is transferor as well as transferee company, unless and otherwise to ensure uniformity in accounting policy. That is one more thing. So if it satisfies all these conditions, then what happens? It is a case of merger. Then amalgamation in the nature of purchase. So what do you mean by amalgamation in the nature of purchase? If one or more condition of merger is not satisfied, then it becomes what? Amalgamation in the nature of purchase. In your syllabus, all problems are relating to amalgamation in the nature of purchase itself. So you need to know only about purchase. One more important concept is about purchase consideration. So what do you mean by purchase consideration? already told, price paid by the purchasing company to the liquidated company is a purchase consideration. So there are different types or different methods of purchase consideration. First one is lump sum method. So what do you mean by lump sum method? That is full entire amount is paid. Suppose there is a 5,000 amount need to be paid, that is paid immediately. That is known as purchase consideration. Then net asset method. Net asset means agreed value of assets minus agreed value of liability. So that is known as net asset method. So agreed value of assets we should take into consideration, and from that agreed value of liability must be deducted to get net asset value. That is one more thing. Net payment method. So what is the difference between net asset and net payment method? In the case of net payment method, what happens? Here, except the asset, other things are considered, like shares, equity shares, preference shares are considered, and debentures are considered, and cash is also paid by the transferee company in the case of net payment method. And what do you mean by share exchange method? Share exchange method is nothing but intrinsic value of share. So what do you mean by intrinsic value of share? Intrinsic value of share is nothing but net asset available to equity shareholders. That is agreed value of assets minus agreed value of liability divided by number of equity share. If you do that, you will get share exchange method or intrinsic value of share. So that is one more thing. So there are 4 methods of purchase consideration: lump sum method, net payment, net asset method, net payment method, and share exchange method. Next is about intrinsic value. So what do you mean by intrinsic value? That already I have told, net asset available divided by number of equity share. Next, methods of accounting for amalgamation. There are 2 methods of accounting for amalgamation. One is in the nature of merger, and one more thing is in the nature of purchase. So when you are considering it as in the nature of merger, when there is no information about purchase, that means all the conditions are satisfied, and there is no goodwill also. There is no goodwill, and differences are adjusted in reserve balances in the case of pooling of interest method. That is the nature of merger. And what is the nature of purchase means? Purchase means, if you see, excess amount of consideration over the value of net asset is equal to goodwill. That means what? Consideration is more than the net asset, and that is known as goodwill. If the amount of consideration is less than the net asset acquired, then the difference is known as capital reserve. And all other journal entries are same in the case of merger as well as in the case of purchase, except this entry that we will see while seeing the journal entry. Now, entries to close the books of account of transferor company or selling company. In the books of selling company, what and all entries we have to make? First is for transfer of asset. So whenever there is a transfer of asset, realization account, first thing you have to do is realization account. In realization account, debit side, you are going to write all the asset, all concerned asset at book value. So realization account debit to various asset at book value, first entry. Then for transfer of liability, credit side of the realization account, credit side of realization, you are writing all the liabilities. So various liabilities account debit to realization. That is one more journal entry. Journal entry is important. Yes, if there is a 24-mark problem, they'll ask journal entry. So journal entry you need to know before solving the problem. Then for purchase consideration due, next is how you can pay purchase consideration, either by the way of cash or by the way of shares or by the way of debenture. So entry is bank account debit to shares account, bank account debit, shares account debit, debentures account debit to transferee company. The transferee company means purchasing company. That is the third journal entry. Then fourth is for payment of liquidation expenses. So how you are going to pay liquidation expenses? So there are certain adjustment here. If expenses are met by transferor company, then what is the entry? Realization account debit to bank account. That is the journal entry. If expenses are met by the transferor company. If the expenses are met by transferee company, then no journal entry need to be passed in the books of transferor company. That is one more thing. Alternatively, expenses are paid on the behalf of transferee company. That means transferee company's behalf, transferor company is paying the expenses. Then in that case, what happens? Transferees company account debit to bank account. That is one more thing. Then or reimbursement of expenses. Whenever you are reimbursing the expenses, that is bank account debit to transferee company account. See, these are all very important journal entry. You need to know. Then or assets not taken over but realized. Whenever there is assets which are not taken over but realized, then bank account to realization account. That means any asset realized, you are going to write in realization account. Credit side, you are going to write. Then for liabilities not taken over. For liabilities not taken over, whether purchase consideration entry is wrong. Purchase consideration, transferee company account debit to realization in the presentation.
Sir, you have given payment entry, sir. Payment entry you have given. Purchase consideration entry is transferee company to realization. Payment entry will be bank shares and debentures thing. Third entry.
Payment entry.
Now that is payment entry actually.
Yeah, this
due
is
is always. Yeah.
Yeah. What is the entry for due then?
Due entry will be transferee company to realization.
Transferee company account to realization. Yes.
Realization.
Credit side of the realization we are writing. Yes, yes. So this is for purchase consideration payment entry. We have taken this one. Then, yes, for assets not taken over but realized, we are going to write in the credit side of realization account. Then seventh entry, for liabilities not taken over but paid. In the case of liability which is not taken over but paid, if payment is made at a book figure, then liabilities account debit to bank account. That is one journal entry. Then if payment is made at a lesser amount, then liabilities account debit to bank to realization account. See, if there is a lesser amount payment is made, realization account credited. Then payment is made at a higher amount, then liabilities account debit, realization account debit to bank account. And one more thing, you don't need to buy at this entry. Just while solving the problem, you'll come to know. You need to solve more and more problem. That's it. Then, yes, for the amount due to preference shareholder, then whenever there is an amount due to preference shareholder, when redeemed at par, what is the entry? Preference share capital account debit to preference shareholder account. So preference share capital to preference shareholder, and whenever it is redeemed at a premium, it is a loss to the company. Whenever there is a loss to the company, what is the journal entry? Preference share capital account debit, realization account debit to preference shareholder. Since it is a loss, realization account is debited. Then whenever it is redeemed at discount, that means it's a profit to the company. Whenever there is a profit to the company, preference share capital account debit to preference shareholders to realization account. So here realization account is credited because it is a profit to the company. Then for the settlement of account of preference shareholder, that is preference shareholder account debit, 2 shares, 2 bank, 2 debenture account. How you are going to settle preference shareholder? First you are returning preference share capital along with any other balance, payment made in cash, payment in debenture, that and all are giving to preference shareholder. So this is a journal entry for settlement. For closing realization, whenever there is a closing of realization, when there is a profit, what is a journal entry? That is realization account debit to equity shareholder account. So this is very important. Realization when there is a profit. So whenever there is a profit, you are writing in debit side to equity shareholder in realization. Whenever there is a loss, you are writing it in credit side by equity shareholder. So there's a reverse entry here. Equity shareholder account debit to realization account. Then for transfer of capital, accumulated profit to equity shareholder. So equity shareholder, that is equity share capital account debit, if profit and loss account debit, accumulated reserves and funds account debit to miscellaneous expenditure to equity shareholder account. That means what? Equity share capital along with any reserves and any profit and loss account balance must be paid to equity shareholder. So that is for that this entry need to be passed. Then for final settlement with equity shareholder, how to settle equity shareholder account? By various modes of payment. So first is bank or maybe the bank means in cash, then in shares, then in debenture. That is equity shareholders account debit to bank account, to shares account, to debenture account. That is final settlement with equity shareholder. So these are the entries in the books of transferor company. Now we need to see entries in the books of transferee company, that is purchasing company. In the books of purchasing company, there are mainly three entries that we need to see. That is in the case of purchases. For first one, purchase consideration due. That is business purchases account debit to liquidators of transferor company. So suppose there are A and B limited and C is a purchasing company. And liquidators of transferor company means A limited liquidator as well as B limited liquidator. Then for discharge of purchase consideration, then liquidators of transferor company account debit to equity share capital, then to debenture, to bank account. This is second entry in the books of purchasing company. So this you need to see carefully, second entry. Then third one, for the assets and liabilities taken over, that is various asset or concerned asset at agreed value debited to concerned liability to business purchase with the consideration amount. Business purchase means what? Purchase consideration amount. Nothing but that purchase consideration, if you are calculated at the beginning of the problem, that itself is the amount you are going to write under business purchases. So here, total credit exceeds the total debit, then excess is treated as goodwill. That means credit side, liability side in this entry, various liability as well as business purchase is more, then debit side is less. Then in debit side, you are going to write as goodwill account debit as a balancing figure. That in the case of total debit exceeds the total credit, then what happens? Then it is credited to, balance is credited to capital reserve. So this capital reserve you are going to show in the liability side of the balance sheet, and anyways goodwill you are going to show in the asset side of the balance sheet. That is one more thing. And for payment of liquidation expenses, suppose in the books of transferee company there is an entry, then goodwill account debit to bank account, that is liquidation expenses. Then for discharge of any liability, that is liabilities to bank. Suppose there is a discharge of any debenture, then debentures account debit to bank. So that is the way you are going to write. That is one more entry. Then for the expenses involved for its own formation, suppose there is any preliminary expenses involved for incorporation of the company, that is preliminary expenses account debit to bank account. One more journal entry you are need to pass. So now what is the difference between purchase method and merger method? See, in the case of merger method, there is changes in entry number 3 only. So what is entry number 3 here? Entry number 3 in the books of transferee company, this entry. See, various asset to various liability to business purchase. And in the case of purchase, what we are going to write? Goodwill or capital reserve. But in the case of merger, there is only reserve, adjusted reserve entry. There is no goodwill. Difference between the amount of consideration payable by the transferee company to the transferor company and the amount of share capital of transferor company is adjusted in general reserve or other reserve. So these are the journal entries you need to know before solving any problem. And I have selected the problems which are repeated in nature. That means in the previous year, in the previous year, problems and all I have taken for this. So yes, 6-mark problem we are going to see now. First one, Moon Limited agreed to take over the agreed to acquire the business of Sunset Limited as on 31st/3/2016. The balance sheet of Sunset Limited on the date is given below. So first is liability side. Liability side, share capital, preference share as well as equity share information is given. Then general reserve, profit and loss account balance is also mentioned. Then as well as 6% debenture and creditor value is also given in the liability side. Asset side, goodwill, land and building, stock, debtors and bank information is given. So total of the both the side is 10 lakh. Total of the both the side 10 lakh. And purchase consideration is to be calculated as follow. Equity shares are to be redeemed at 6% premium by issuing equity shares in Moon Limited. So first you need to see what is the equity share here. Equity share here, 30,000 equity shares of 10 each that is 3 lakh. So there is one adjustment while calculating purchase consideration. Second adjustment, 9 preference shares in Moon Limited are to be issued for every 5 shares held in Sunset Limited. The face value of preference shares for both the companies are same. So in that case, first thing you need to decide which is a transferor company and which is a transferee company. Moon is agreed to acquire the business of Sunset. That means Moon is a purchasing company. Sunset is the selling company. So Sunset is a transferor company. So you are need to calculate purchase consideration. Very, very simple problem. Only for 6 marks. So first adjustment you see equity shares redeemed at 6% premium. So equity share value 30,000 equity shares of 10 each. That is 3 lakh. 3 lakh you have taken. Then there is a issued at premium. So 6% premium. Either on 3 lakh you can take 6% premium. You will get 18,000, or else on number of shares you can take 6% premium. That is 1,800 into face value. You will get 18,000. So first amount 3 lakh plus 18,000. 3 lakh 18,000 will be your one answer. First adjustment answer. Then second one, 9 preference shares in Moon are to be issued for 5 preference shares held in Sunset Limited. Now you see preference share information. Here preference share 30,000 preference shares are given. So you go for the adjustment, 9 preference share in Moon for 5 preference share in Sunset. So there are 30,000 preference share in Sunset. So cross multiplication. Do cross multiplication. 30,000 into 9 divided by 5. 30,000 into 9, that is 2,70,000 divided by 5, you will get 54,000. 54,000 into face value, that is 10, that is 5,40,000. So total of both, total of first adjustment and second adjustment, you will get total purchase consideration as 8,58,000. So very, very simple problem. Very simple problem. This type of problem is frequently asked in examination. So see this. Yes. So next one, second problem. Second problem of 6 mark, we are going to see. Following is the balance sheet of Amar Limited as on 31st March 2016. Liability side, share capital, general reserve, profit and loss, 6% debenture and creditor is mentioned. Asset side, goodwill, plant and machinery, furniture, stock, debtor, bank and preliminary expenses are given. Total of the balance sheet is 16,20,000. Bhushan Limited takes over the business of Amar Limited. So here Bhushan Limited is a purchasing company, Amar Limited is a selling company on the following term. Goodwill is to be valued at 2 lakh. So here that is agreed value of goodwill is given in the adjustment, that is 2 lakh. Other assets considered at book value. That means other all asset you are going to write as it is. Bhushan Limited does not take over the balance of bank. So bank balance you should not consider. Purchase consideration is discharged by issuing 90,000 equity shares of 10 each valued at par and balance in cash. So that is mode of payment. How you are going to pay after getting purchase consideration. Calculate purchase consideration and show mode of payment. So yes, you need to solve the problem. First one you need to do working note, calculation of purchase consideration. In this problem, if you see here, all information regarding assets and liabilities are given. And one more thing here, they have mentioned about business. Business means assets as well as liabilities. So you need to consider both. And here we are going to apply net asset method. Net asset method of calculating purchase consideration. So first one, agreed value of assets taken over, goodwill. Goodwill value, revalued value is given, that is 2 lakh. Plant and machinery as it is, furniture as it is, stock as it is 6 lakh, debtors 2 lakh. See all this amount at book value as it is except goodwill. Bank is not taken over, so you need not record bank. Preliminary expenses is a fictitious asset, so you are not going to write preliminary expenses. Minus agreed value of liabilities taken over. Even though liabilities information they have not given in the problem, here they have mentioned about business. So business means liabilities also. So liabilities 6% debenture and creditor. Only 2 liabilities given. 6% debenture, that is 3 lakh, and creditors 3,20,000. So 6,20,000 total. that is agreed value of liability, you need to deduct from agreed value of asset, you will get purchase consideration, 9,80,000 as purchase consideration. Then how you are going to pay, mode of payment, see the adjustment. Purchase consideration is to be discharged by issuing 90,000 equity shares of 10 each. That means 90,000 into 10 in shares. In shares, 90,000 into 10, that is 9 lakh. You are going to consider, that is payment in shares, 9 lakh. Then remaining in cash. Remaining in cash means 9,80,000 minus 9 lakh, that is in share. 9,80,000 minus 9 lakh, you are going to get 80,000 as payment in cash. See this, these both total are equal. Purchase consideration as well as mode of payment total is equal. So this is how you are going to solve this type of problem. So very simple problem for 6 marks, or else they'll ask theory questions for 6 marks. Except these problems, theory question will come for 6 marks. So now we are going to see 12 marks problem. We will move on to 12 marks problem. So 12 marks, and one more thing, in amalgamation there is a problem of absorption also. Absorption problem also they'll ask for examination. So we'll see absorption problem. So there's no difference, except there's a minute difference. Same procedure you need to follow. Sun Limited absorbed the business of Moon Limited as a going concern on 31st March 2016. The assets and liabilities of the Moon Limited on that date were as follows. So Sun absorbed Moon. Sun is purchasing, Moon is selling. So liability side, paid up capital, 30,000 equity shares of 10 each, and that is given. Then 1,000 preference shares of 100 each, that is mentioned. Creditors and bills payable given in the liability side. Asset side, goodwill, land, plant, debtors, stock, bank, preliminary expense, and profit and loss information is given. So total of the balance sheet is 4,80,000. Term agreed between the two companies were as follow. So now there are certain adjustments. First one, for every 10 equity share in Moon Limited, Sun issues what? 12 fully paid shares of 10 each and paid 10 in cash. That means for every equity share, equity shares of 12 equity shares of 10 each is issued, as well as payment in cash is made. For that you need to do working note. Then preference shareholders of Moon Limited were paid at a premium of 5% by issue of 6% preference shares of Sun Limited at par. So this is the second adjustment. Then all assets and liabilities were taken over except the cash to the extent of 3,000, which was left over for meeting realization expenses. See, all this, there is adjustment we need to see while solving the problem. Plant was revalued at 1,83,000 and other assets and liabilities were taken over at respective book values. You are required to prepare realization account, shareholders account in the books of Moon Limited and opening entry in the books of Sun Limited. So basically you need to prepare ledger account in the books of selling company and journal entries in the books of purchasing company. So first thing you need to do is calculation of purchase consideration. So first working note is calculation of purchase consideration. See, first adjustment. We are going to see now first adjustment. For every 10 equity share in Moon, so total number of equity shares, 30,000 equity shares are given in the problem. 30,000 equity share. For every 10 equity share, 12 equity share in Sun. So do like this, 10 equity share in Moon. Then 12 equity share of Sun is given. Then 30,000 equity shares of Moon. What is the answer? So cross multiplication. Then there is a 30,000 equity share in Moon. What is the answer? Cross multiplication. That is 30,000 into 12. That is 3,60,000 divided by 10. You will get 36,000. 36,000 into face value. That is 10. There is no information about premium or discount. That is directly they have given at par. So 3,60,000. Payment to equity shareholder in cash. In the first adjustment itself, see, paid 10 in cash they have given. So there is one more adjustment in the first adjustment itself. So 10 equity share in Moon, 10 in cash is paid. So there are 30,000 equity share in Moon. What is the answer? Cross multiplication, 30,000 into 10, that is 3 lakh divided by 10, that is 30,000. 30,000, there is only one. There is only one C. Pay 10 in cash for each share. So they have given each share. So we are going to consider only one. So the answer is 30,000. So answer will be here 30,000. Yes, there is a correction, 30,000. Then payment to preference shareholder in preference share. Next adjustment, preference shareholder. Preference shareholders of Moon Limited were paid at a premium of 5%. So what is the value of preference share? Here 1 lakh is a preference share. So 5%, add 5% to that. 1 lakh plus 5%. So that is 1 lakh 5,000. You will get payment to preference shareholder in preference share. Total purchase consideration amount is 3,60,000 plus 30,000 plus 1 lakh 5,000. That is 4 lakh 95,000. So this is the working note for purchase consideration. Then now in the books of transferor company, you need to prepare ledger accounts. So in the books of Moon Limited, first thing is realization account. So realization account, first you need to write all the things at book value. So book value, once you see the asset side information, goodwill, land, plant, debtor, stock, and bank information is given. So write it as it is. Goodwill 50,000, land 2 lakh, and 1 lakh, debtors 50,000, stock is 30,000. We are going to write it as it is. Then what about bank? Bank, they have said 35,000 as a figure given in the balance sheet is 35,000, but except cash of 3,000 is left for meeting realization expense. That means from 35,000, 3,000 is kept aside to meet liquidation expense or realization expenses. So you are going to exclude this 3,000. So please this exclude the 3,000, 35,000 minus 3,000, 32,000 in bank. To bank account 32,000 met for realization expenses 3,000. And one more entry you need to pass is realization to bank account, that is realization expenses paid. Same 3,000 you are going to show to bank account realization expense 3,000. Then to preference shareholder. Preference shareholder paid at a premium 1 lakh 5,000. Balance given in the balance sheet is 1 lakh. So here loss to the company. Excess of 5,000 is paid to preference shareholder. Whenever there is a loss, realization account debit to preference shareholder, loss on payment 5,000. We are going to write debit side 5,000. Then credit side information. Credit side information, creditors and bills payable. Whether there is any other information, no. Creditors and bills payable 30,000 and 50,000. So you are going to write as it is 30 and 50 bills payable. And purchase price, that is purchase consideration already calculated in the working note. That is 3,60,000 plus 30 and plus 1 lakh 5,000. So by Sun Limited, that is by purchasing company, that is 4,95,000 purchasing purchase consideration. Now you make the total. So total of the credit side is more than the total of debit side. So total of the credit side is 5,75,000. Total of so both the side you write the same total, and there is a difference amount. Difference amount is transferred to equity shareholder. So equity shareholder difference amount, that is 1,05,000 profit on realization. Very simple. Realization account, that is very simple. You are going to do. Then after realization account, you need to prepare shareholders account. So there are two types of shareholder here, equity shareholders as well as preference shareholder. For each of them, you need to prepare separate account. So first is equity shareholders account. In equity shareholder account, first entry is a transfer entry from realization. Just now we have got the profit. So this profit you are going to transfer. So realization to equity shareholder. So in equity shareholder account, that is by realization account, realization profit 1,05,000. Then credit side, you are going to write equity share capital. Equity share capital is given in the balance sheet. That is 3 lakh. 3 lakh given in the balance sheet. So by equity share capital 3 lakh. And debit side, any fictitious asset. Any fictitious asset given, that you need to write. That is preliminary expenses mentioned in the asset side of the balance sheet 5,000. Then profit and loss account 10,000. That is also given in the asset side of the balance sheet. See, preliminary expense 5,000 and profit and loss account 10,000. Both they have given. So that you need to write in the debit side of equity shareholder account. Then 2 equity shares in Sun Limited. So what is this entry? 2 equity shares in Sun Limited is a payment made to equity shareholder. So that is payment made to equity shareholder in equity share. So to that entry here it comes. So 2 equity shares in Sun Limited, 3,60,000. Working note 1. Working note 1, you have got this answer. Then 2 bank account. 2 bank account is your balancing figure. Credit side is more than the debit side. So balancing figure is 2 bank account, or it is, yeah, here payment in cash is given. Payment in cash is given. So that payment in cash means 2 cash or bank account. So that you are going to write 2 bank 30,000. Equity shareholder account should tally. That is 4,05,000. Both the side it tallies. Yes. Then next is preference shareholder account. Preference shareholder account, same thing. Credit side, first you are going to write preference share capital. That is given in the liability side of the balance sheet. 1 lakh. 1 lakh preference share capital, that is given in the liability side. You are going to write by preference share capital. Then what about this by realization? That is loss. By realization, loss to the company. That is transfer entry from realization account. By realization, because we have written 2 preference shareholders. We have written 2 preference shareholders. So to this one we are going to write. Yes. Preference shareholder account. Yes. By realization 5,000, that is lost to the company. From realization we are transferring this entry. See, don't write on the screen. Don't write on the screen. Yes. And what about preference shareholder debit side? Debit side, 2 preference shares in Sun Limited. 2 preference shares in Sun Limited means payment to the preference shareholder at a premium value. Working note. See the working note. Their working note, they have third one. Payment to preference shareholder in preference share, that is at a premium. So that amount comes here. Debit side. Payment to preference shareholder. Preference shares in Sun Limited. How they are paying? Shares of Sun Limited. So 1,05,000. So these are the shareholders account, equity shareholder as well as preference shareholder account. Now in the books of Sun Limited, you are going to pass journal entry. Journal entry you are going to pass. So that is nothing but purchasing company's book. You are going to pass journal entry. Basic 3 journal entries are there that you need to see. First journal entry. Business purchase account debit to liquidators in transferor company. So here liquidators in transferor company means liquidators of Moon Limited. Business purchase to liquidators of Moon Limited being purchase consideration due. Amount you are going to write here is purchase consideration total. Purchase consideration total amount you are going to write, that is 4,95,000. See total of purchase consideration. All 3 adjustment total. So that we have written in the first entry. Second entry, that is liquidators of Moon Limited. 2. How you are going to discharge purchase consideration. How you are going to discharge purchase consideration, that we are going to see. Liquidators of Moon Limited account debit. 2. What and all way? First thing we have paid in equity shares. First adjustment equity shares. So 2 equity share capital you are going to write 3,60,000. Then we have given preference shares at premium. So 6% preference share capital, that is 1,05,000. Mode of payment basically we are going to write in second journal entry. And remaining 30,000 we have paid it in cash. So this is how you are going to pass the journal entry in the books of purchasing company. Then last journal entry, various assets to various liabilities account. So various asset, goodwill account, leave it as it is because it will be your balancing figure. Leave it as it is. Go for other items, all other assets. That is land, plant, debtor, stock, and bank. So all item here, whatever you have, whatever given in the asset side. Once you see the asset side, land, plant, debtor, stock, and bank information, and same thing you are going to write. Same thing you are going to pass in the third journal entry, land account, that is 2 lakh. But what about plant? Plant, there is a revalued value. Revalued figure is given in the adjustment. revalued figure of plant is 1,83,000. So agreed value basically you are going to write. So agreed value is 1,83,000 you have written. So agreed value. And stock as it is. Bank, what about bank? 35,000 minus 3,000. Minus 3,000 for what? That is for liquidation expenses. So agreed remaining value basically, or else you can see directly realization account. Realization account and write the amount. Write the amount of realization account because there we have adjusted. Yes, bank account debit 32,000. Now liability side. Liability side, two creditors 30,000 directly and two bills payable 50,000 directly given in the balance sheet and two business purchase account. This amount is again purchase consideration amount. Wherever there is a business purchase account comes, then you need to write purchase consideration total amount. So being assets and liabilities are taken over. So in this entry, credit side is more than the debit side. So credit side total is more than the debit side. So what happens here? Goodwill is your balancing figure. So if you deduct 4 lakh, first make a total of 4,95,000 plus 50 plus 30,000 and deduct all the debit side item. You will get 80,000 as your answer. So this is 12 mark problem. Yes, this is 12 mark problem. You can see very simple. I can't say that this is simple because there is some lengthy in nature. You need to pass the entry. So yes, what can you just
Bank account 32,000 thing. Can you just show it up?
bank account? Wait.
Yeah, 32,000 you have shown no, in the third entry.
Yes.
Sun Limited.
Yes. This one in the books of transferee company or transferor company. What do you want? Journal entry or ledger account? Ledger account. This one.
Yeah, this one, 32,000.
Yes. Did you understand
That
this
is given, no?
Which one?
Ah,
35,000.
yeah, that one. Correct.
35,000 balance is
3,000.
given. Yeah,
Okay,
3,000.
sir. Okay.
Yes. Excluding 3,000.
Ah,
That is why we have deducting this. And after that, we have
okay.
written realization expenses. Because same 3,000
Yes.
is for realization expense. Yes.
Hmm.
Yes. So this is about
Okay.
12 mark problem. So 12 mark problem. One problem we have solved. Then one more problem we are going to see. So one more 12 mark problem. Nirlon Limited. See the problem. Nirlon Limited decided to sell its business to the Reliance Limited as on 31st March 2016. On that date, balance sheet was as follows. So liability side, paid up capital is given, reserve fund 5% debenture, creditor and profit and loss account information is given. Asset side, freehold property, then stock, debtor, bills receivable, goodwill and cash at bank information is given. So now, adjustment. The Reliance Limited agreed to take over the asset, excluding cash. So that means what? All the asset excluding cash balance at the amount stated in the balance sheet, except goodwill, for which company agreed to pay 2 lakh. That means what? Goodwill, there is a change in the balance. The agreed value is given. Agreed value 2 lakh you should consider. Then discharge the liabilities to creditor. Here only they have talked about creditor only. And what about 5% debenture? 5% debenture is not taken over. So whenever it is not taken over, what happens? It is paid by selling company itself. Selling company itself means here Nirlon company is selling company. Reliance company is purchasing company. So selling company needs to pay debenture amount. Yes, because they have given only creditor. Then purchase price was to be discharged by the allotment of 24,000 shares of 10 each at 12.5 per share and balance in cash. That means here shares are paid at premium value. See here 10 each at 12.5 per share and remaining in cash. Expense of liquidation amounted to 6,000. Show realization account. Then the Reliance Limited account. Reliance Limited account means it's a purchasing company account. Then equity shares account. Then equity shares in purchasing company. Basically, that is equity shares in purchasing company. Then bank account. Then equity shareholder account in the books of Nirlon Limited. So here in the books of transferor company, you need to show ledger account. So first we need to see working note for purchase consideration. Purchase consideration working note. First one, agreed value of asset taken over. All assets are taken over at book value except goodwill. Goodwill is agreed at 2 lakh. So all assets you are going to write at book value and exclude cash. Cash is not taken over. They have specifically mentioned. So all assets you have written here. So agreed value of asset taken over will be 7,20,000. This agreed value of liabilities taken over. Agreed value of liabilities taken over means here only creditor information. Why only creditor? Because debentures are not taken over by the purchasing company. So whenever debentures are not taken over by the purchasing company, it is paid by the selling company itself. So 60,000 only. So 60,000 less deduct from 7,20,000, you will get purchase consideration as 6,60,000. Then mode of payment. Mode of payment, yes. How you are going to pay this total? How you are going to pay? So mode of payment, once you see the adjustment, purchase price was to be discharged by allotment of 24,000 shares of 10 each at 12.5 per share. So basically 24,000 into directly premium value. Premium value directly given. That is paid at a premium 12.5. So 24,000 into 12.5, you will get 3 lakh. 3 lakh. So remaining in cash, balance in cash. So 6,60,000 minus 3 lakh. 6,60,000 minus 3 lakh. So remaining is 3,60,000 that is paid in cash. So total is same for purchase consideration and mode of payment. See, debentures were not taken over, so it is paid by Nirlon Limited. Now you are going to pass ledger account. This one, ledger account you need to prepare in the books of Nirlon company, that is transferor company. So now realization account. In realization account, first at book value, freehold property, stock, debtor, bills receivable. At book value, you are going to write. See, freehold property, stock, debtor, and bills receivable at book value. Goodwill also now. Goodwill also you need to write at book value. But because in realization account, first everything need to be written at book value. So goodwill 80,000 at book value, that is given in the balance sheet. 80,000, not 2 lakh. 80,000. And bank. What about bank? Bank expenses, liquidation expense, realization to bank account. The expenses of liquidation amounted to 6,000. They have not said about any other information. So we'll assume that it is paid by the transferor. Yes, that is in the books of transferor company. We are going to charge to bank expenses 6,000. Then credit side only creditor, by creditor 60,000. Then by Reliance company, that is what Reliance Company Limited to realization account. Purchase price that is already calculated in the working note 6,60,000. So to equity shareholder, profit on realization, that is credit side of the balance is more than the debit side, you will get 1,14,000 as a profit. Yes, that is transferred to equity shareholders account. Next thing you need to do in the books of transfer companies, purchasing company account. Purchasing company account, first thing, if there is any transfer entry, see from realization there is one transfer entry. By Reliance company we have written, so to realization, directly transfer entry to realization account, 6,60,000 debit side of purchasing company account. Then credit side, here you are going to write mode of payment. How this 6,60,000 is paid off. First in shares, by equity shares 3 lakh. Then remaining in cash, that is 3,60,000. See, mode of payment, that is in shares 3 lakh, in cash 3,60,000. So total 6,60,000 both the side. Next, equity shares. Equity shares account, if you see again, equity shares, any change here, transfer entry. Once you see equity shares, any transfer entry, yes, equity shares in purchasing company, by equity shares we have written. So to Reliance Limited, see this, to Reliance Limited 3 lakh. And this equity share is given to equity shareholder. So credit side, by equity shareholder, paid to equity shareholder 3 lakh. So equity share account, very simple. just you need to transfer the amount. Then bank account. Then you need to prepare bank account. Bank account balancing figure. First you see bank balance. Cash at bank given, that is 2 lakh. Debit side, cash at bank is mentioned, that is 2 lakh. So to balance forward, that is 2 lakh they have given. Then to Reliance Limited. To Reliance Limited is paid in cash. Payment in cash we have taken. So that is to Reliance Limited, 3,60,000 adjustment. Adjustment, if you see here, see balance paid in cash 3,60,000. So to this one, Reliance Limited, 3,60,000. Then credit side, by realization. By realization 6,000, that is what liquidation expenses paid. From realization account to bank we have written. So by realization, to bank we have written. See, to bank we have written. So by realization you need to write transfer entry. And 5% debenture. 5% debenture is not taken over by the purchasing company. So you need to write this 5% debenture here. That means it is paid off. It is paid off by the transferor company by 5% debenture 2 lakh from the liability side of balance sheet. Then by equity shareholder. By equity shareholder, yes, balancing figure. Balancing figure will be 3,54,000 by equity shareholder, because debit side is more than the credit side. Then finally you need to prepare equity shareholders account. So debit side, first one, equity shareholder account debit side, to equity share, payment in share. Payment in share to equity share 3 lakh. See this payment in share, paid in equity shares they have given. So debit side all payment you need to write. Then what about the credit side of equity shareholder account? All assets, all share capitals need to be transferred. That means here equity shareholder, equity share capital along with reserve, along with profit and loss account must be transferred to equity shareholder account. So credit side you are going to write all transfer entry. So that is by realization account 1,14,000. What is this 1,14,000? Profit on realization transfer entry. So by realization 1,14,000, and by equity share capital directly given in the question 4 lakh, by reserve fund given in the question, by profit and loss given in the question. So 6,54,000 credit side total, and debit side 6,54,000. Yes, both the side total is same. So balancing figure to bank account final settlement, that is 3,54,000. So it is better to prepare equity shareholder account first, then you go for bank account. So this is about 12 mark problem. Yes. So we have solved 2 6-mark problem and 2 12-mark problem. Then in the next class, we are going to see about one more 12-mark problem we are going to solve. Then 24 marks 2 problem we are going to solve in the next class. Yes. Now I will wind up this class here.